We're going to talk about meals deductions. Now, I frequently see with new clients I've just brought on, that their meal expenses are huge. And then I pulled the transactions for their meal deductions, and there's a lot of $2, $3, $9, $7 transactions. And I immediately recognize, okay, these are all personal meals. They're probably personal meals. And you're probably not going to be able to take a deduction for those because you won't be able to overcome the presumption that this was actually a personal meal. And so we're going to talk about meals deductions, what you can and what you can't deduct as a meal. Now, there are a lot of elements to it, what is classified as a meal deduction, but I'm going to highlight some of the bigger things to consider related to that. Now, where do I always say to go related to anything tax? You got to go to the tax code. And so let me give you just a general way to determine whether something is deductible or not. So the first place to start is the Internal Revenue Code and Section 162. And that is, what is a deduction? What is a business expense? According to the Internal Revenue Code. And that's going to be any expense, this is a general rule, that is ordinary or necessary. So it's an ordinary and necessary expense. And we'll talk about that a little bit more. But the short version, the short answer to that is this what other businesses would do that are in my industry? Would they spend this money? Would they need this money? Is this something that they would do in order to make a profit? The other section of the code I want you to be familiar with is Section 262. And what it says is unless Congress creates a rule in the tax code that says you can't deduct a personal expense, you cannot deduct a personal or living or family expense. They're just not deductible. All they are is money you spend in order to live. So when you sit down for that cup of coffee at Starbucks and you're working at Starbucks and you're thinking, oh, I'm working, I can write this coffee off. The answer to that question is no, you probably can't write it off because you're probably not going to be able to overcome the presumption that this is just a personal meal, that you are the only person that benefits. So again, when you're talking about business deductions, what you're referencing is an expense that was incurred in order to generate revenue. And generally, when you incur an expense, when you spend money, there's some kind of exchange that takes place. And what you are hoping as a business owner is the expensing, the using of that money creates a big enough exchange to where you profit. You collect more money than you ultimately spend. So let's talk about business deductions. And so in my firm, when I'm talking to my clients and I'm preparing their financial statements, I generally break those meals down into 4 categories. There's client meals, company meals, travel meals, and public meals. Client meals are, I think, self-explanatory. You're sitting down with a client or a prospective client and you say, hey, let's go grab lunch and let's talk about doing business together. That's a client meal. A company meal would be a meal you have with your employees or your vendors or your contractors. Hey, we got this project we're working on. Let's not stop working. Let's sit down. Let's have a meal and let's talk about this project. I don't want to stop working right now. I got the meal. The company's going to pay for it. We're going to keep working and we're going to work through lunch and get this done. That's a company meal. Or if you have a company party, that would be a company meal. A travel meal is a meal when you're on business away from home and you got to eat. Well, you're away from home and you have to eat. So the Internal Revenue Code in Section 274 allows you to take a deduction up to 50% for that travel meal. And then public meals, the perfect example of a public meal is you are a realtor and you're selling a house and you have an open house. So you go buy cookies and you put the cookies out so that anybody who comes in, to look at the house, oh, we got some cookies. They can eat the cookies, or you put some fruit out or something. So those are public meals. So those are deductible meals. So here are some components of Section 274 and on the deductibility of meals that I want you to understand. So We talked about this before. Any deduction, not just meals, needs to be an ordinary and necessary expense for the business. That's section 162. There needs to be some kind of business connection with that meal. So again, the exchange. What is the business connection of you sitting down, doing work, eating lunch? Where's the exchange where you're going to generate more revenue from that? The productivity, it's probably not going to work because you're going to have a hard time coming over the presumption of section 262 as it being a personal expense. You're going to have a hard time coming over that presumption. Lavish or extravagant. Haven't found any court cases related to this. We'll talk about that briefly. And my favorite, which I will have in nearly every video, you have to be able to substantiate the legitimacy of the deduction. You have to do that. There's no way around it. All right. Ordinary necessary expense. We talked about this. We've hammered on it. It's got to be ordinary, which means everybody in the industry, everybody in business does something like this. Necessary means it's something that you need to do. Now necessary doesn't mean necessarily that it absolutely has to be necessary. What it means, for another way to look at it, is it's appropriate for what you would do. Do people take clients out for lunch? Yes, they do. Okay, that falls kind of under the category of necessary. All right. Business connection. There must be some kind of connection to having the meal. And it's got to be obvious. It's got to be clear. I sit down with a client. I'm sitting down with a prospective client. It's very obvious what that business connection is. I'm trying to get money from that person. I'm trying to close a sale. I'm trying to do some work for my client. I'm trying to entice my client to continue to be a client. There's a business connection with that meal and the event. Or you're sitting down with your staff. Hey, we got a project. There's the business connection. We're working through lunch because we want to get this project done. Or you're working on some kind of deal. So again, the way to look at expenses, in meals in particular, is where's the exchange? If you are the only person that's there having the meal, it's going to be hard to have some kind of business connection because there is no exchange. Now, lavish or extravagant, the thing I want you to take away from this, again, I haven't seen any court cases around lavish or extravagant, but simply because something is expensive doesn't mean that it's lavish or extravagant. You may be trying to impress a client, and maybe that client is going to bring in a lot of revenue. You may go to Nobu or Eddie V's or some expensive restaurant to try to entice that client, to close that deal. That's not lavish, not necessarily lavish or extravagant. The way the courts will look at this is under the facts and circumstances of your spend. Again, I wanted to point this out so that you know it's there, but I don't want you to think just because something is expensive doesn't mean it's lavish or extravagant. And here we are again, my favorite, substantiation. You must be able to substantiate the deduction. What does that mean? Have a receipt. You need to write down on the receipt why were you there? I was with client John Doe. I was trying to close a deal. We were working on, this was a sales call for tax plan for 2024. We were having a company meeting. The project we were trying to close was a Salesforce implementation, and we needed to work through lunch. Something where you can substantiate why there was a business connection related to that. And so, all business deductions, everything in your tax return needs to be substantiated some kind of way to have a connection to the deductibility of that in the tax law. Now, there is an exception to this rule. There is one exception to this rule, and that exception is the $75 rule. Now, this rule is misapplied a lot. So I want you to understand how this rule ultimately works. And the short version of it is there is generally other things around that specific deduction that will, on its face, substantiate this rule. So that is the exception to the $75 rule. And what it says is, if you have an expense that's less than $75, you don't need a receipt for this particular transaction. Travel meals is one of those situations where if it's less than $75, you don't need a receipt. You sit down in the hotel, you buy breakfast, the breakfast is $23. You don't have to keep that receipt. Why don't you have to keep that receipt? Because you're going to have a receipt from the lodging. You're going to have probably airfare that you bought that shows, and it's going to be around the same time frame that you had all those other events that took place. So if you have a meal, so if you're traveling and you have a travel meal that's less than $75, you don't need a receipt for that. This also works for gas. So if you pay for gas and it's less than $75 and it is on a trip, then you don't need a receipt for that. Again, that is assuming there are other things around it that can substantiate that, oh, this was just part of that particular trip. Employee reimbursements. So if your employee comes to you, you sent them out on you sent the employee out on a trip. Then they submit an expense report to get reimbursements for that trip. Or they submit an expense report with the credit card, the company credit card. The expenses that are less than $75, you don't need a receipt for that. And the reason being is not because you don't necessarily need to substantiate it. It's just everything else around that receipt, that transaction, can support that it's a legitimate business deduction. So that is the exception to the rule. So deducting meals. It actually is fairly simple to know whether a meal is deductible or not. Is this meal a meal that any other business in your industry would pay for as part of running their business? Can you support, and by finding some business connection and having a receipt to show that, oh, this was a legitimate, I did this because in the furtherance of my business? And can you overcome the presumption that the meal might be a personal meal, that only you are the person that are benefiting? So if you keep those rules in mind, those general rules in mind, you shouldn't have a problem recognizing what meals you can deduct and which meals you can't.